Hello and wishing everyone a very happy Diwali. But for now, the markets are in the red, but it's the year that really counts, and we have had a stellar run in the year gone by, and here's hoping the next year is as profitable as the last couple of years have been for the Indian market. So pretty much okay for the year.
Yeah, pretty much okay for the year. Not quite the week or the month though. It's a little bit of a shake-off, and definitely it could have been a better Diwali. Soured a little bit of sentiments and punctured quite a few portfolios at an individual level. So there you go, the Nifty Bank taking a knock off another near about 500 points right now. The Nifty is at the session lows. We are back at the 24,200 print right now, and that's a cut of about 171 points, if you will. Technology, of course, has been the weak link today. So you've got a TechM, HCL Technologies, TSYS, Infosys, all in the red. The consumption leg of the economy definitely has been a bit of a question mark, especially after the Q2 commentary, and you're seeing nothing different really play out today as well. So be it Tata Consumer, be it Titan, these are all stocks which are in the red as we speak right now. Trent also has knocked off another 1.7%. ITC as well lower. Britannia. All these consumption stocks are taking a beating. The Nifty Bank, like I mentioned, so look out for what ICICI Bank is doing. Currently lower by about 1.5%. There's Axis, which is down by about almost 1% as we speak right now. SBI down about 1%. And to think of it, SBI is, I think, going to be one of the net winners in the week gone by, because Monday, Tuesday, you did have a big move on SBI, along with, of course, ICICI Bank as well. So that's pretty much it for the market. L&T, though, continues its pole position, post its numbers, a gap up start, and has managed to hold on to that gap up. 6.5% is the uptick on the future still, and Cipla is right on top as well with that 10% gain. But lots to analyze, and lots really to look forward to come next year. So let's welcome on board Chakri Lokpriya, Naresh Mirani, Kunal Bothra, and talk about what they're making of the market right now. Kunal, firstly, a word on the Nifty and the kind of sudden shake-off that you're currently seeing.
Yeah, it's a shake-off of sorts for the indices, because again we are seeing a lack of large cap names seeing any kind of a follow-through on the upside, but there is a definite follow-through for the stocks on the downward trend when the stocks have gone through a corrective phase or showing signs of a trend reversal as such for many of these larger cap names. So I think that's adding to the concerns for the index. The bigger concern for the markets today is the sharp correction which you're seeing into the Nifty IT names or the IT stocks. I think because these are the only two sectors, the Nifty IT and the Bank Nifty, which were holding strong for the last few days. So I think that's one concern for the markets, because if the Nifty IT index sees maybe another round of correction of another 2 to 5%, then we could be expecting that could probably have a stronger effect on the Nifty as well. So so far, looking at the market internals today, expecting that the markets could probably come back to retest the 24,000 mark over the very near term.
Okay, 24,000 might get tested, but Chakri, the word on the street is that it's perhaps that Diwali discounting which is at play when it comes to the stock markets. Are you utilizing that, buying anything at lower levels?
Good afternoon. Happy Diwali to all of you and to all the viewers. I think, IT clearly is one should buy in today's fall, because, yesterday's fall in the US was on the fears of a slowdown of Facebook and Microsoft. But why did they said they will slow down? They said that they would spend a lot on IT infrastructure. Now, that is good news for Indian IT companies, and therefore, I think in today's fall, we should go and buy HCL Tech, Emphasis, all those companies which cater to the BFSI industry.
Right, okay. Naresh, hi, afternoon. What's looking like the weakest link in the market? And if we were to test that 24K mark, would it be a broad-based sell-off once again? Or do you think some sectors could manage to actually hold ground?
So if you look at the markets today, the advances and declines are almost 1.7 to 1. The small cap index is actually up 0.5 to 0.7%. So the breadth is not bad, but if you look at the index, 50-60% of the fall today comes from the IT sector. And we've seen a swing low break for IT. And from June onwards, the leading sector were FMCG, IT, and pharma. So we've seen FMCG collapse. We are now looking at IT also breaking down. Pharma, the momentum has been reduced in quite a few names. So overall, it's a rotation at play. Earlier, the rotation was on the upside in a lot of cases. Now we are seeing leadership changing on the downside. Banks which were holding on in the last 2 days have also given up. But for now, the view remains same. We are in a consolidation, trying to form a range and a base. So for now, expecting broader markets to continue to do well purely because they've been showing a lot of relative strength.
Let's see whether that relative strength really plays out or not. But Chakri, I was hoping that yesterday itself we had seen that reaction of the Capgemini, guidance cut, because it had come during the market hours yesterday. In fact, overnight Cognizant came out with its numbers and they had upgraded the guidance. But still, the entire IT pack is in the red right now. What do you make of it? And is this a time to perhaps buy some of the IT names?
When Meta and Microsoft said they will spend on infrastructure spending, so they're going to spend a lot on cloud. So cloud is the thing where all the Indian IT companies are, whether it's Mphasis, HCL Technologies, TCS, name it, they're all there. And so, which means that is actually good news. And now with US elections are going to be out of the way next week, thereafter, I think we should see an acceleration of discretionary order flow. And therefore, it's time definitely to dip into IT because, that segment for Indian IT companies will grow at least 30-40% top line. The cloud computing, that is, and therefore that's not a number to sneeze at.
Okay, so that's the take coming in on IT at the moment. But of course, auto sector is something that will be on the radar as well. The October sales data will be out tomorrow or maybe day after on account of Diwali. Let's see how it really pans out. But Somit will join us shortly to talk to us about what the expectations are. It's a very important month because that will tell you the direction, how the festive sales have really panned out. Somit, what are the brokerages penciling in?
Well, the October auto sales would be important to track given the fact that festive demand will also be partially reflected in this month. But do remember that the entire demand for festive is not coming in the month of October. Some of this will also fall in the month of November. Now for the October month, if you look at the wholesale sales, they are likely to be mixed. We'll see some growth when it comes to the two-wheeler and the tractor segment, while we are expecting a flat overall performance for the passenger vehicle segment and a decline when it comes to the commercial vehicle segment. Now festive season, however, on the retail side, the festive season retails are positive for two-wheelers, tractors and passenger vehicles as per various channel checks done by the brokerages. Now if you look at segment-wise, in the commercial vehicle, Tata Motors is expected to see the biggest decline on a YOY basis, around 10% of a decline in the wholesale sales, while for that of Eicher, VECV is expected to remain largely flat, and for Ashok Leyland, a minor decline of around 1% is expected on a YOY basis. When it comes to two-wheeler, it's Eicher Motor which is expected to see the biggest jump in its wholesale sales both on a month-on-month and YOY basis. On a YOY basis, expect to see a 16% growth, followed by TVS Motor which will report a 10% growth. Then there is Hero which could report a 6% growth as per analyst expectation, while for Bajaj Auto is expected to be largely flat, just 1% growth. When it comes to passenger vehicle, it's M&M which is expected to report the highest growth of nearly 9%. Then there are other three passenger vehicle companies like Maruti, Tata Motors and Hyundai which are expected to report a decline on a YOY basis. When it comes to the tractor segment, it's Mahindra and Mahindra which could report a 2% growth, while for Escorts a 1% growth is expected. And largely when it comes to the three-wheeler segment, we are expecting a decline from TVS Motor of around 19%, but for Bajaj Auto, analysts are expecting an 8% growth on a YOY basis on three-wheeler sales.
Right, Samit, we leave it at that. Well, what's Diwali without food and festivities? So my colleague Astha Chopra actually managed to have a sit down with Haldiram's and their prime stores in Mumbai. So let's get an excerpt of that chat in.
Haldiram is also known for its chaat.
Absolutely.
And as you said, you're from Delhi, so there is no secret behind a Raj Kachori, and we can see here, like, this is bhel puri and samosa, and I think Raj Kachori is the most sold product.
It is the most uniquely sold product. I think Haldiram is more synonymous on the salted part of it as a Raj Kachori brand. Like it is the laddus or the burfis on the other side.
Yeah, I think it's the same because we can see like chaat is an essential part of North India if we talk about.
Absolutely.
But Haldiram being present everywhere, almost everywhere in India, it plays a very important part. Like Haldiram ke bhel puri, Haldiram ke samosa, chaat, Raj Kachori is very famous. Also, I wanted to play a very quick round of rapid fire. So it will be just 2-3 questions of very fun activity. So if I would ask you sweet or salty for life?
I think sweet for me.
Sweet for you. Kaju katli or motichur laddu?
That's a tough one.
I know, right?
I would prefer motichur laddu as of today, but right. Right? I would not want to upset the Kaju Katli either.
That's true, that's true. Also, Haldiram is a great thing for packaging also. So
Yes.
whether you will choose expensive gifts or the Haldiram ka goodie package, I think it's all in one, but yeah.
Right, so the Haldiram goodie pack is so well defined that it can replace any gift that you can talk of.
Yeah.
Right, or it complements any materialistic gift. Right, without the sweet box or the savory box, I think the gift looks incomplete. And so any design of Haldiram gifting box goes very well with all sorts of occasions. Today it's Diwali, but there's so many festivals that India has, and it
That's
becomes the
true.
core part of the gifting segment.
Yeah. If you would have given one power to your chef to make laddus in 4 seconds or make, what do we have, like Raj Kachori for life, what would you choose?
I think I would encourage them or maybe ask them to make laddus really fast. The demand is unstoppable.
Yeah,
Right?
actually, that's
Every
fine.
day, 4 o'clock, 5 o'clock, the stock starts running out, and then there's a problem. And you can't overstock it because the product is really fragile. It has to be made fresh every day and to be sold every day.
That's true, that's true. Also, my last question, would you give the interview for ET Now every Diwali or no food at all? That's
I would be happy to come to ET Now, right? Whether it's about food or non-food, but I think ET Now is also a core part. Like the Diwali festival, it is also a part of our lives.
Back with closing trades right here in ET now. Just looking at the rates right now, we're down a good 170 points as we speak right now for the Nifty. L&T Cipla still holding out, as is Hero MotoCorp and Dr. Reddy's, but that's not quite the state with the IT pack, or for that matter, some of the banking names as well. They're the ones which are acutely weighing heavy, along with, of course, FMCG as well. But as we get set to welcome the new year, let's take a look at how equities have fared out as an asset class over the years gone by, how commodities in various sectors as well have been. We've got Ansh joining in right now to throw some more light on that. Ansh?
Well, it's been a gainful Samvat with significant gains for indices and specific stocks. Let's break it down. Starting with broader indices, we are seeing that Nifty has climbed over 24%, but mid-cap and small-cap are the one who have stole the show. They have given a move of more than 30%. Now, if we talk about sector indices, then Nifty Pharma, Nifty Realty, Nifty Auto and Nifty Energy is in top gear, surging by more than 40%. Rest of the indices have also given a positive move. Actually, all sector indices have closed in green till this Samvat. Now, if we talk about individual stocks, then top gainers for Nifty are Trent, BEL, Bajaj Auto, M&M and Bharti Airtel, each giving an up move of more than 70%, with Trent giving an up move of almost 190%. Now, if we talk about losers, then here we are saying that IndusInd Bank, Bajaj Finance, Nestle, Asian Paints and Kotak Bank are the top losers in Nifty. Apart from IndusInd Bank, we are seeing that all other stocks have given only single-digit down move. Now, taking a quick glance at alternate assets, Bitcoin has given an up move of more than 80%, gold has surged by more than 40%, whereas copper has given an up move of 20%. Only crude has taken a hit by more than 5% on downside. Now, if we talk about global indices, then Nifty has not topped the global indices, but it's definitely in top 3 index. So overall, it has been very gainful and positive Samvat.
Very gainful and positive indeed, and here's hoping the next Samvat is as gainful too. But Chakri, let's talk about one of the big movers from last year, and that was Trent. Do you expect that kind of performance to continue for retail majors like Trent and consumption plays on urban India?
Companies like Trent and Titan will continue on their path. The only thing is their valuations, you need to catch up. So which means we can expect the stocks to pause a bit until they catch their breath and evaluations catch up. But in terms of, their business momentum remains strong. Gold as an asset class for purchase.
There's a bit of a connection issue there. We'll try and reconnect the line, but the theme seems to be that the retail stocks, at least the ones focusing on urban India, are likely to do well because that's a structural story which is at play at the moment. But talking about L&T, that stock continues to gain ground, 7% higher for that one. In fact, let's hear out what the management had to tell in their con call, because they were quite positive and optimistic about the growth outlook and the order inflows as well.
So we did anticipate a 3 to 6 months moderation in terms of the momentum, and true to our expectation, it did play out that way, and hence the order intake from the domestic market for the half year is roughly about 1/3 of the total order intake that we are reporting for quarter two. The orders that the company won during Q2 is about 800 billion rupees. Looking ahead, we see a fairly healthy prospect in terms of pipeline between now and March of 25. We expect the domestic orders, which so far in H1 have remained flat, to pick up momentum. But going forward, we expect carbon light solutions as well as green energy to pick up pace. So the skew towards hydrocarbon projects will get somewhat moderated.
Okay, so that's the take coming in on L&T at the moment, but just taking a look at what are the other big buzzers, like of course Cipla tops the chart, you have Rainbow Children's doing well, Jubilant Life, DOMS Industries, these are some of the names on the gaining side, while on the losing side, it is about 5-star, which is down 8%, Aditya Birla Capital is coming under pressure, and of course the IT pack. Kunal, you've been quite positive on AB Capital, the slide of 6%, are you surprised, and what happens to the long-term trends then?
Yeah, the longer term charts are still positive and intact for AB Capital. Today's move, I think, is just about a counter reaction to what happened yesterday in the last half an hour, 1 hour, when the stock moved up higher by a margin of 6%, I think 6 or 7% yesterday, when it moved from 202, 205 levels to almost 215 to 16 plus mark. So I think it's now come back to that starting point of 202, 205 range for AB Capital. Now, the longer term charts are intact and positive. The longer term support for the stock is closer to 180, 85 levels, which means that in case if the stock retests the levels of 185, that could be a very good opportunity to try and chip in further.
Okay, let's pick up on the two buzzers then. L&T, of course, is seeing an earnings reaction. The street has, liked the commentary from the management on the order inflow and, of course, the visibility going forward. And the other one, of course, has been Cipla, which has also shot up from the word go today after the US FDA classified their Goa manufacturing facility as a VAI, and the brokerages have already upped the EPS estimates by about almost 4%. Chakri, let's get in a chart check on both L&T. Okay. Naresh, let's get in a chart check on both L&T as well as Cipla.
So L&T is interesting. The stock tested the support levels of 3,200, 3,300, which was the price point on the day of elections, plus a couple of times before in February and May. And we bounced back from those levels. The recent swing highs are at 3,600, which has also crossed. So ideally, we go back and test 3,850 levels, which has been a resistance. So that would complete the range-bound move, which it is going through. It's beyond 3,850 where it gets into a newer trend. Cipla, on the other hand, has corrected from 1,650, 1,700 all the way down to 1,400. And now again, on bounce back towards 1,600 would continue to be a major resistance going forward.
Point taken. Chakri, we lost you there. You were talking about Trent, Titan being the urban consumption plays. What about them?
Yeah. Sorry about that. And now going back to Titan, both of them and Trend continue to remain very strong plays. An RBI rate cut will clearly help. That's the next step of growth, that acceleration in growth we'll see, because it's inevitable whether in a next month or two we have one. And the companies are well placed. Their business momentum is in place.
Okay, the companies are well placed. The business momentum looks on the upside. That's the take coming in on some of these counters at the moment. Piramal Pharma has also actually managed to do quite well. What's your view, Chakri, on pharma as a whole? Of course, Cipla got that overhang away with the Goa getting VAI, and then even others like Piramal Pharma and many other names have reported good set of numbers.
Like we saw today with Cipla, it's because of they got that approval for their Goa facility, and the stock is up about 10% because expectations have moved earlier from 26, 27 to 25. So I think that's pretty much the name of the game. So Cipla is still well positioned because they will get that nearly 10% uptick in earnings because of the new launch, and their existing one other product will also do well. But so that is the name of the game. So it's not a sectoral thing. I think Cipla still looks okay. Piramal probably has done its bit.
Chakri, I just wanted to kind of take a follow-up on pharma, because many of these names, and let's pull up the 12-month chart, they are up anywhere between 40 to 50%, whether it's, Piramal Pharma, Biocon, even the smaller ones at that. Which names would you still recommend as buy despite the up move?
Yeah, we don't want to begin with as a sector. We are not too hot and heavy on this particular sector. It's still a very stock-specific approach. Maybe Piramal, more than Piramal, it is Cipla. And it has various overhangs, including this FDA approval. And that would probably add about 10% to EPS. Even after today's run, I think the stock has probably another 15% upside over the next 12 months. Outside of that, Mankind Pharma from a consumer perspective, consumer uptick perspective still looks okay. So it's more selective. We're not really big on pharma.
Okay, not so big on pharma, but Chakri, great to have you on the show and wish you and your entire team a very happy Diwali from us.
Thank you and have a nice Diwali.
Okay, we'll take a very quick break, but Times Network had the privilege to cover the 8th edition of the FII Summit 2024 at Riyadh, and Nikunj was there. He caught up exclusive conversation with some of the top dignitaries from the likes of Piyush Goyal, Yashish Dahiya from PB FinTech, and many more.
Commitment that India has to working closely with Saudi Arabia and the Middle Eastern countries has only grown from strength to strength. So there are opportunities in Saudi Arabia for Indian investors or startups or young entrepreneurs. As regards the India story, the world's fastest growing large economy, soon to be the world's third largest economy, aspiring to be a $30-35 trillion economy by 2047. The world is our stage, and I think there is no better time than today.
We're still trying to figure out if there are ways to do it in a low asset way, right? Without physical assets, etc. We're struggling with that. Is there a way to do it? But we're trying very hard to see if there is a way to do that. The question is very simple, right? Today, when I speak to both hospitals and insurance companies, both seem to have issues with each other, right? I know the insurance world, I don't know the hospital world.
Understanding the trends apart from AI, which is now current, there are a lot of other things that are happening, and our role would evolve from compliance, transactions, to crisis management, to most importantly ethical issues. Next 5-7 years, the transactions, the deal making, even the negotiation is already being done experimental level by AI. Okay, third role that will be crisis management, strategic thinking, use of law as a strategic instrument, and finally the ethical issues. So role of lawyers will evolve from routine transactions or compliances to the next level of societal changes.
Change of guard happening, and we are maybe 2 years away from the consumerization of AI. So we're kind of in this middle ground where I would say use AI to build efficiency. Slice, okay, I'm biased. Amazing company, geared to win, frictionless banking, phone pay, for sure. And I think the third could be, again, I'm kind of biased. It's going to be somebody like a Razorpay in the payment space, as well as EaseBus, which is a vertically focused payment gateway. So Razorpay is amazing in enabling payments in the e-commerce space.
Welcome back. Well, the market continues to reel under pressure. In fact, 24,200 is where we are at. So off the lowest point of the day, but nonetheless firmly in the red, and there hasn't been any major buying on dips today which has emerged. Volume-wise, of course, it's a bit softer, but not completely down and out. So that's the overall setup of the market at this point of time. It's Tech Mahindra, HCL Tech, Wipro, TCS, Shriram Finance. All of these stocks are in the red right now. And to add to that, from the broader markets, a lot of stocks which are coming under pressure, especially AB Capital, 5-star business, of course, the entire IT pack. Then you also have Go Digit, which is on the back foot, Balrampur Chini, and Poonawalla FinCorp. All of these stocks are down and out. But this Diwali, we caught up with a whole host of market gurus, the likes of Prashant Jain, Ravi Dharamshi, Hiren Ved, and many more. Hear out what the big voices have to say about the year that lies ahead.
Transition towards renewable is, yes, the renewable companies will grow, but you have to be cautious. How sustainable are those earnings? and what are we paying for those earnings. And as I had said earlier, at least in terms of power generation, the existing utilities, large utilities that are able to borrow at cheaper rates than their peers, I think they should be the winners in the marketplace, and that is what is being experienced also.
Definitely, CDMO is one space where a big opportunity is opening up right now. Only thing is, we are unable to judge at this point of time what the timeline could be, because the Biosecure Act in US has left a window of 7-8 years for the Chinese companies to continue supplying. And if there is going to be any further dilution, then that remains a risk. But otherwise, from a pure commercial and economical sense, it makes all the sense for the companies in US to start diversifying their global supply chain. So in a way, this is also a China plus one play. I think capital markets last 3 years have done well, and the numbers are there. The kind of flows mutual funds are getting, all that is getting baked in. But we believe this is not the end of the story. This feels like this is going to have a long runway. We are still at about unique around 9-10 crore kind of demat accounts. I think that number has to swell to 20-25 crore by the turn of this decade, and that will mean the sustained growth. So there will be a lot more beneficiaries coming out of this sector, capital markets place. We like wealth managers, but there are other plays like exchanges, brokers, discount brokers, market infra companies. Those are all reporting good numbers. That should do well. We do like insurance as well. Insurance has had a bad 5 year. Of course, last 6 months have been good, especially on the general insurance side, because the competitive intensity has finally abated.
My sense is that, and I believe that, in this cycle is more for the capital marketplace, because you have to follow where the money is. So if the retail household guy is not putting money in deposits and putting money in SIPs markets, or mutual funds, then you are better off buying a capital market plays, and I think those have done far better than betting on banks. In the long run, premium real estate will do phenomenally well, because Indians are getting wealthy, and the stock market has made so many promoters and founders wealthy, and people do like real assets, whether we like it or not.
Absolutely.
When they make a lot of money in the stock market, they want to take some money out and buy a couple of houses or flats and park their money there.
Absolutely.
So I think real estate is by far, in my view, one of the best ways to play premium consumption.
Okay, let's pick up on the market conversation forward. We have with us market expert Ajay Bagga joining in on the show right now. Ajay, hi, good afternoon. Firstly, wish you a very happy Diwali from all of us here at ET Now.
Thank you, Aisha, and heartily reciprocate it for all viewers and the entire team.
Right. So Ajay, just wondering, how can Diwali be happier? Should one already be buying this decline in the market, or still wait it out and wait for the dust to settle down?
I think very tough to answer this question, but there are opportunities emerging. But definitely we can wait it out, especially till about 6-7 November, till the US presidential election clarity emerges. There won't be much difference in the two policies, even though the rhetoric is quite vitriolic. But we expect that policies will be on similar grounds. But I think China is better prepared. They've already announced a stimulus, and one more stimulus is up its arms because they are expecting tariffs to come in, irrespective of the who wins. And with Trump, it will be higher tariff, more rhetoric, and with Harris, it will be maybe lesser tariffs and more focus on the poorer segments. But anti-China sentiment is very widespread. It's like 1980s. I remember when Ronald Reagan was the president, he took a hammer to a Japanese car outside the White House, and he broke it with that hammer. So that's the kind of sentiment against Chinese manufacturing hollowing out the US. So expect that. We are collateral damage in those EM outflows. The second big part is the US economy doing very well. So with that US exceptionalism of holding up its economy, we are seeing more and more flows still going to US stocks. 145 billion have gone into US based ETFs from Asia and Europe this year, which is a record number. Every week, we are seeing very strong inflows into the US stock market. So entire EM flows are suffering because of that. We have not really had Chinese inflows for the last 2.5 weeks. In fact, when the stimulus was announced, China saw 53 billion coming in 2 weeks. And that's when the market went up very sharply. But over the last 2.5 weeks, about 15 billion 1.5 has gone out of the Chinese markets as well. So it's, US dollar strength, US yields up, US exceptionalism in economic terms, and then the presidential election, where a few thousand votes will actually decide who takes the White House. So out of those 7 swing states, if you see the Biden-Trump difference, it was 43,000 votes, Aisha. So this time also, probably 50,000 odd votes will decide who takes the White House eventually, and markets will be very volatile going into that.
Yes, markets have been volatile and expected to stay like that for the next couple of weeks. Perhaps be very cautious if you're looking at trading in the market, or just stay away till the time that clarity emerges. That's the view coming in. But Ajay, hi, this is Anisha joining in the conversation and wishing you a very happy Diwali as well. Wanted to get a better sense from you regarding the other asset class which has been shining bright this year, and that's clearly been gold. Given the entire volatility and the narrative that you were talking about, do you expect that rally in gold to continue?
Yeah, right now, yes, because the demand is quite strong. Though World Gold Council today, I saw a Reuters reportage saying that Indian demand might slow down, but that's very marginal. From about 765 tons, it might go down to 750 tons this year because of the elevated prices. But the Chinese investors, remember 70% of China's wealth was sitting in the property market. And as against our $6 trillion of residential property market, that's a $60 trillion market, which has got cuts of 20 to 30%. And a massive amount of unsold inventory, massive amount of mortgages running, but construction not started. So there is a lot of trouble in that Chinese property market. So the incremental savings and investments are going into gold. So they have these gold bullets, what they call 1 gram, 2 gram, small pieces of gold, which are being bought by the Chinese investors month on month. And that's been happening for nearly now 12 to 18 months. That's the fundamental behind the gold price. The third big contributor is the central bank. So from about 6% of FX reserves sitting in gold nearly 10 years back, today we are at 11% of FX reserves sitting in gold. So there is a de-dollarization, de-westernization post-Ukraine, but there is also an attraction for gold against a dollar where, there is concern. If you look at the US debt, it's rising at about $1 trillion per 100 days. So just in the next 1 year, you will have 3.5 trillion more. It will probably cross 40 trillion. US interest outgo has reached $1 trillion with these enhanced rates. And still a lot of the US outstanding gilts have to be repriced. So it's not that fully the treasuries have been repriced. And already 23% of US budget is going just on interest servicing. We are beneficiaries. The big bonanza that RBI gave to the government was largely based on what we earn on our US, Euro and Japanese FX reserves. So we will benefit this year also, as against 0%, we'll make 4.5% again on that massive 700 billion of FX reserves. So we are beneficiaries of that. That's a second order effect. But the first order is, it's helping gold overall.
Interesting. Kunal, what's your analysis? You think that volatility is only going to heighten, and given that our market construct is as it is weak, can we expect further weakness as we approach closer to US elections, which is in the first week of November?
Yeah, I looked at the markets over the last many decades, and it looks like that liquidity-based sell-offs, they are very, very short-lived, and we've seen historically that that leads into sectors falling sharply, or the markets correcting aberrations in the sense if there are any excesses which gets created in terms of sectors which are overbought, stocks which are overbought, and indices which get back into a string of strong outperformances. So the market tends to correct those, but once that correction happens is where the markets finds its feet pretty much on the back pretty much quickly, and we get back into a V-shaped recovery for many of the stocks. And there are of course new leaders which emerge with every kind of uptrend which resumes post the sharp correction. So for example, over the last 1.5 odd months, we've already seen a 7 to 8% correction broadly for the Nifty, almost like a 8 to 9% correction for the Bank Nifty, and many of the sectors, for example the auto stocks, the energy sector, etc., many of these sectors have already corrected by 15 to 20%. So when you see such kind of a sharp corrections into individual spaces, my sense is that the markets are just about going through a phase of correction rather than a major reversal. Whenever that settles, I would believe that we should be on course of coming back into strength for the indices. Now the point over here is very, very important, which that once the market gets back into its feet, or gets back into a recovery phase, which are the kind of sectors and stocks which would tend to give stronger leadership stance. And I think in that sense, I would probably believe Bank Nifty, and especially the private sector banking names, as well as select PSU banking stocks, I think they are the ones which could probably be one amongst the first ones to try and pick up pace. If the IT stocks also manage to recover over the next 1 week, and especially the large cap IT names like HCL Tech, TechM, Infosys, etc., then I would believe that even IT stocks could probably follow the lead. So I would probably be of the view that this could be a phase where longer term traders could start to look to accumulate as well.
Okay, accumulate as far as the long-term traders are concerned. Before we head into the break, Kunal, what's your view on gold and Bitcoin, these two asset classes? Ansh was just telling us how they have done very well in the last somewhat. What about the coming year?
See, I believe gold has run its part to a major extent. Now I would probably believe that it's time for Bitcoin to try and give a big breakout. In fact, the charts for Bitcoin are very, very interesting. It's almost like a a rounding bottom formation for Bitcoin, and a flag formation. So a lot of combinations of technical patterns which are being formed for this asset class, and I would probably believe that that's generally a sense that the markets are getting into a risk on mode. And then we try and look at what's happening across the US indices and the global indices. So except for our markets, I think there's been a far more stable index trends across the globe, and especially in the US and the Europe indices. So I think in that sense, I would probably believe that Bitcoin could be the next bigger trend in terms of a breakout over the next 12 to 18 months at least.
Okay, so that's a chart telling you on Bitcoin, but do remember it's a risky asset, very volatile, so be very cautious and careful when you perhaps trade or invest in that one. Time for a short break. Don't go anywhere. We'll be right back with more.
Back with closing trades right here on 80 now, and we're still in the week as we speak right now. Let's just check in on what the global markets are up to, because they also are seeing pretty much the same fate all across. Over 100-point knockoff for the DAX, the FTSE as well, lower by about nearly 8/10. Similar is the picture for the CAC, and 140 points lower for the FTSE, MIB and Stock 600 as well. But let's talk about what really is happening in our market. We've been flagging off as to how technology is the weakest link today. That along with FMCG, banks as well, not really holding out well. There are blue chips like Reliance, Bajaj Finance. They're also sub that 1% cut is what they're seeing right now in trade. But Ajay, how is it that you're now navigating within the private banking pack? Once again, it seems like the consensus trade, but what is it that you are picking out from this pack?
No, absolutely. And, Kunal summed it up very nicely. I'm totally in agreement with him. The top end 4-5 private sector banks and the top 4-5 public sector banks. That's your outperformance area. Industrials, then FMCG on a contra bet. What we are expecting is that if you look at the government expenditure numbers, by September they have caught up. But you have seen nearly 2 lakh crores extra of government revenues. If you look at the gross tax collections, that's nearly 2.25 lakh crores extra. That's the kind of money which has gone out and not come back. So what you would have really liked to see would have been some counter cyclical ballast given into this economy, like what China is doing. They are also, it's not that China is in a negative GDP and they are trying to stimulate themselves. It's more 4.25% GDP they're trying to take to 5%. And based on that, they brought in the stimulus. It might be too less given the size of the property crisis in China. But I think the government has a lot of fiscal space now where it can stimulate the economy, give some pump priming into the economy, cut some rates on, say, petrol, diesel or something. Give up some of your revenues and, or, you know, say an automobile, give a stimulus to that segment. Very targeted stimulus can help the economy again go back very sharply. Despite that, I don't think much will happen. But despite that, the second half should see consumption picking up. The government infrastructure has been year on year slightly lower. And these are September end numbers. The earlier numbers, it was sharply lower. And we were expecting nearly a 40% pickup in infrastructure would be needed in the last 6 months to make up. But they seem to have moved out. Now, I don't know if that is money spent from finance ministry into another ministry and not really gone on the ground. That we will have to wait and watch and study the data much deeper. My own thesis is that money has not reached the ground so much. It's lying in some department and shown as expenditure from the general pool. That will come back and that will have an impact. And there the beneficiaries, the two very big beneficiaries will be banks and the industrials. You will see them rocket off. And FMCG, because it's so beaten down and everybody's writing it off, that would be the third. IT has been another call which I've been making for the last 3 to 6 months. Today is a bad day to say IT after Meta and Microsoft disappointed, and we have seen the whole sector getting sold off. And then we have Apple and Amazon tonight in the US. You know, we'll have to wait and watch those numbers. But IT turnaround is coming. Those use cases for AI are coming. And the amount of money being put in AI, that will engender better things. The model will change. You know, what really caught the market's attention was Google saying 25% of their coding is now done by AI. You know, and then engineers test it, engineers make it more robust and they launch it. But 25% of the basic coding, which an engineer sitting in India or offshore would be doing, that is now being done by AI. So we'll have to move up the value chain. But, you know, at least 8-10 companies in India are there who will be able to do that. And not the entire world geography is moving that fast. Korea and Japan, for example, are laggards. So there maybe we pitch for more. Europe, again, there are other issues. But US will really lead this AI push. And we have 8-10 companies who can engage and benefit from that.
Okay, Mr. Bhagat, on that note, we let you go, and here's hoping the next year is even brighter and prosperous for you. But time now to tell you what the Wheel of Fortune holds and what Mr. Ramdev Agarwal has to say about the same in the special chat that Nikunj had with him earlier.
अब रामदेव जी जब हमारे साथ आते हैं तो बात होती है कंपाउंडिंग की, बात करेंगे दिवाली की, बात करेंगे पैसे बनाने की, बात करेंगे बुक्स पर। चलिए, ये व्हील है हमारे पास और रामदेव जी इस व्हील को ईमानदारी से घुमाएंगे और रामदेव जी बताएंगे जहाँ पर चक्का रुकता है उसको क्या करते हैं। तो क्या क्या है इस पे? लर्निंग फ्रॉम लास्ट 1 ईयर, वन मस्ट हैव कंपाउंडर, योर दिवाली प्लेज, निफ्टी लेवल नेक्स्ट दिवाली एंड योर मल्टी बैगर आइडिया। यहाँ पर चक्का रुक गया तो मजा आएगा, यहाँ पर चक्का रुकना चाहिए, मगर चक्का रामदेव जी घुमाएंगे। चलिए रामदेव जी। रुका रुका रुका, ये मल्टी बैगर में रुकने वाला मुझे लगता है, ईमानदारी से।
बच गया बच गया बच गया।
आया 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 ये तो बीच में रुक गया। चलिए इधर घुमा दें इसको।
सेक्टर टू वॉच आउट फॉर।
हाँ जी
है ना। So I think sector to watch out for private sector bank, I would say one of the sector, and second is digital forever.
अच्छा। Sector to watch out for digital forever. Any company which has got digital, आगे पीछे digital.
Actually, digital you should not buy individual companies so much as a fund or ETF. You know, so that I mean, which one will, because digital companies are also from all over, from gaming to payment to quick delivery. I mean, I think there are 15-20 companies and they are increasing. So I think you got to be there.
वहाँ रहना चाहिए।
वहाँ रहना चाहिए।
चलिए अब 3 बार चक्का घुमाना है। कायल मल्टीबैगर का हाथ लग जाए आपके हाथ। चलिए ये चला 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 धीरे से चलाया अपने आप भी चाल समझ गए कहाँ नहीं रोकना है इसको। और ये देखिए आने वाला है आने वाला है आने वाला है और इसमें चीटिंग नहीं है भाई, ये रियल है ये।
Go 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 go!
Biggest regret.
The biggest regret. Wow.
इस मार्केट में रिग्रेट्स है नहीं, सबने पैसा बनाया है।
बहुत बने पैसे तो रिग्रेट तो क्या बोले। Maybe I am playing golf now.
अच्छा।
So I should have started few years earlier.
मुझे तो पता था टीटी खेलता था पहले।
हाँ लेकिन but golf I am liking actually.
अच्छा।
First time any game I am liking. I wish I had learned it little earlier, 10 years earlier.
चलिए और आखिरी बार मैं चलाता हूँ, कहाँ पर रुकेगा मुझे नहीं पता। ये चलिए चलाया, उल्टा चलाता है, मैं लेफ्ट हैंडर हूँ। ये देखिए कंपाउंडर, कंपाउंडिंग एंड कंपाउंडर। कंपाउंडर जो रामदेव जी के लिए होता है वो होता है स्टॉक कंपाउंडर। आम आदमी के लिए कंपाउंडर होता है जो सुई लगाता है, मगर रामदेव जी आपका कंपाउंडर हमेशा अलग रहता है।
Where it is stopped? Which asset class will outperform?
ये तो घुमा के मैं चीटिंग कर सकता हूँ ना, एंकर हूँ देखिए शो का। चलिए इसको घुमा देते हैं।
I think allocation in Indian market, Indian equities is the biggest mother of all the companies, and it is very difficult to get it out of you. One of the reasons I have done well in the market is that because I have been 100% invested at top of the market. 4 times I have seen 50-60% correction, and yet I sat through. So वो आपको being a compounder, you have to be in the market in bad time. वो so compounding में there has to be no break in your ownership.
जी हाँ, चलते रहिए।
No, खड़े ही रहना पड़ेगा, अंदर ही रहना पड़ेगा आपको. So you allocate less, but stay allocated. So the biggest compounder is index itself or the country itself, Indian equities as a whole, and then within that, I would think that biggest compounder will be digital.
Yeah. और वो गणित एक बार दोबारा बताते हैं हमारे दर्शकों को। 25% अगर आप 10 साल पे ग्रो करते हैं तो 10 साल में कितना हुआ जी?
10 गुना।
10 गुना। 25% पे 20 साल पे ग्रो करते हैं तो कितना हुआ जी?
100 गुना।
और 25 साल आप 30 साल पे ग्रो करते हैं तो कितना?
1000 गुना।
1000 गुना।
लेकिन आप दूसरा वाला सोचिए, 25% 10 साल में 10 गुना।
जी हाँ।
35% से कितना होगा?
आप बताइए। कंपाउंडर आप हैं।
20 गुना।
20 गुना।
और 45% से 40 गुना।
40 गुना।
तो आप ये ना बोले कि 25-30%, 25 और 30 में बहुत फर्क है। 25% से 10%, 10 टाइम, 30% में 14-15 बढ़ा, और 35% से 20 टाइम पूरा।
क्या बात है, क्या सीखा है आज आपसे? पावर ऑफ कंपाउंडिंग। दिवाली पर भरोसा, हिंदुस्तान की कंपाउंडिंग स्टोरी में बने रहें, डटे रहें, खड़े रहें। एंड रामदेव जी का मानना है कि जब आप 10 साल, 5 साल, 15 साल, 20 साल में अपने कंपाउंडिंग के पावर को देखेंगे तो मैजिकल ही होने वाला है। थैंक यू वेरी मच। हमने बड़ा ईमानदारी से खेला ये। अगली बार हो सकता है जब दोबारा खेलेंगे मल्टी बैगर पर रुक जाएगा। चलिए शुक्रिया, थैंक यू वेरी मच।
Anisha, don't have a wheel for you to spin, but any compounder, Kunal, that you think?
Well, I think if the market stabilizes, that itself is a very good sign. But I think in terms of compounders, I would believe that maybe it could be time that many of the the high beta pocket stocks, I think they are the ones which could start to rally up. So from the real estate pack is something which I would be looking out for. Maybe the likes of Oberoi Realty, Anant Raj, etc. They are the ones which would probably look very attractive.
Okay, that's about the compounders that Kunal is watching out for. But let's take the short-term ideas as well then. Naresh, what's the BTSC trade?
So that would be a buy on ICICI Bank with a stop loss at 1280 and a target price of 1330. And a sell on Emphasis, which is breaking down, stop loss at 2920, target price of 2800.
What about your BTST trades for today?
So I'll go with the sell on Asian Paints with a target of 2840. Stop loss could be kept at 2980. And the second will be a buy on Jupiter Wagons. That's a chart which is looking attractive, heading towards a breakout. Buy with a target of 540. Stop loss at 494.
What's been the biggest compounder for you, Aisha, all of these years?
Staying with ET now.
Yeah.
14 years. What a compounding story.
That's the headline of the day, I guess. That's the biggest compounder. And Here's hoping you stay tuned to ET Now as well, and make sure you get a lot of those multi-baggers and compounding ideas with Aisha, who will be right here to guide you through all the markets ups and downs. But this is the last trading day of this expiry this month, and it's turning out to be a very, very muted one at that. The Nifty almost 100 points lower, 24,230 thereabouts, even though the advanced decline ratio is not as bad. So the broader markets have done okay. It's purely IT actually which is leading the fall today. So Tech, Mahindra and HCL Tech, a Wipro or TCS, all are down and out. And even from the broader markets, take a look at even a Coforge for that matter, or a Birla Soft for that matter, or a lot of the other of those mid-cap IT names. They're all in the red, including the likes of Persistent Systems. On the gaining side, however, it is Cipla that did well. The other, pharma healthcare name which is holding up is Rainbow Children. So that stock is up 9%. DOMS Industries, Tejas Networks, these are some of the names which are in the green right now. Even Reddington for the last couple of days have managed to do pretty okay. So that's how we have wrapped up this Samvat. Has been very, very fruitful and gainful for a lot of investors. Here's hoping that the next one is as bright and prosperous. With that, it's a wrap on this edition of Closing Trades.